How do you see us getting from just back above 80K on Bitcoin to 175 if kind of these dynamics of Trump versus Powell are going to continue through the year?
If you assume that Trump is going to find a way to achieve some kind of Mar-a-Lago accord with all of our trading partners, and we do balance trade, it's going to require a weaker dollar, and that's going to be and it's probably going to require a scenario in which the US dollar is less central to global trade. And so that would be a great environment for Bitcoin and crypto to succeed.
GM, and welcome everybody into another edition of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as we are watching potentially a bottom forming right now. Don't want to get ahead of myself, but it does seem that way as we're watching Bitcoin pop off of that 74,000 level and head back towards 80K, which is pretty insane when you think about just a minute ago, we were looking at about 16% year-to-date losses for Bitcoin, and obviously still in the red, but potentially important bottoms to discuss today, and very happy to have on with us none other than the guest who's been right more often than not, with a $175,000 price target still in play for 2025. I want to welcome back on Coinage Sean Farrell, Fundstrat's head of digital asset strategy. Sean, good to see you again, man, and important, I think, to maybe just put all of these moves in context, because you were out there again. We maybe we should have shouted this a bit last week in terms of your move to stables, really telling people to, hey, be cautious as we go through this chop around tariffs. But what do you see right now, and potentially maybe if we are indeed out of the woods here, as Bitcoin just did cross back above 80K?
Yeah, look, just to recap our views, I think we turned pretty cautious, somewhat cautious in early Feb. Didn't think it was a good time to be adding risk, raised some stable coins in our core strategy portfolio. And then we're mostly Bitcoin and the rest. And then following the Rose Garden interview in which we, had the announcement of the tariffs, with the whole poster board and whatnot, it was pretty clear to us that we were going to move into the market was pretty shell-shocked by the levels, and that, it was right to, move to cash and, wait for some better buying opportunities. Fast forward to today, and I think I'm trying to peek at headlines right now on Twitter, but it looks like we might actually be getting some rumblings of some concessions from the admin. I think, I'm not super surprised to see this at this point. If you looked at the terminal this morning, you had, SPOOs crashing another 3%, the largest 3-day decline, I think, since the Great Depression. I forget the exact statistic. You had the dollar moving lower, but then you had long-term yields actually moving higher. So the 10-year was actually selling off. And I think if you step back and look at that picture, it's very akin to something like an emerging market, and it's very flies in the face of what Besant and Trump are trying to accomplish with long-term yields. And I think that was the market trying to bring the admin, not necessarily to its knees, but perhaps just, slow their roll as it pertains to their tariff approach. And that could be what we're seeing right now. And look, if VIX over 50, high yield was bid today, and we finally, retested for Bitcoin specifically, we retested that old all-time high range, the one we reached back in March 24. So,
well, it looks
I think the opportunity is looking better.
I think, to your point, it does seem that we are seeing Trump's top economic advisor, Kevin Hassett, coming out and saying that what we saw a lot of people call for over the weekend does indeed to be now kind of the direction that the president is moving in, which is a 90-day pause for tariffs in all countries except for China. And that seems to be what has completely swung the markets today, as we see now the NASDAQ up more than 3%. And of course, Bitcoin and the rest of crypto moving in tandem. But I do think that that's interesting because given what we saw over the weekend, it was a who's who of hedge funds and the finance world coming out. You had Bill Ackman. I think we have this chart of just kind of where he's been obviously famously going on CNBC, the Bill Ackman crash out seems to be a bottom indicator across the board. You had Lloyd Blankfein also coming out and saying, look, we got to hit pause on this. And he was saying, take the victory lap on what you did for tariffs so far. So, I mean, when you put everyone together, it did seem like there was this kind of Trump contingent on Wall Street forming, saying, look, postpone these or give us a 90-day window to just pause. A lot of people were calling for that. What do you make of, I guess, now, if this is the case, what that would do if we did have a 90-day pause? Because it doesn't necessarily, I mean, you could reintroduce a lot of this volatility again, just kicking the can down the road. But what says Sean Farrell?
Yeah, and look, the biggest risk is what's going to happen with businesses if this just keeps getting, this can just keeps getting kicked down the road. Because if you look at like the recent ISM reports and business surveys, there's a lot of uncertainty and a lot of capital being withheld from investment due to all of the policy uncertainty. And people don't want to invest in supply chains right now if they're going to have to be completely reconfigured in a matter of months. And so that is still a risk to the economy. Now, I don't know the specifics of this 90-day deferral, whether there's other potential agreements that have been made with certain contingencies, but I think it's important to realize that the longer this goes on, the more deleterious effects it could have on the underlying economy, which could affect risk appetite and ultimately will be very constructive for Bitcoin. But as correlations increase, as risk appetite decreases, certainly in the short term, that could have a negative effect.
Yeah, I mean, I don't know. I guess
in the short term, just to round that out, in the very tactical short term, it's clear that the market is viewing this as tariffs being rolled back, and that should lead to some upward price action here.
Yeah, no, definitely. I mean, seeing that play out. But I guess if you move from the immediate short term, which is literally, I think, second by second as we're speaking here in terms of where we've seen price move. But if you extrapolate that over, let's just say President Trump goes through with it and you got a 90-day kind of relief window, if you want to call it that. I mean, I'm bringing up the Lloyd Blankfein tweet right now, but it's because, he was calling for 6 months, actually, is what I was looking at. It was not just 90 days. So technically 90 days would be even lower than that. But I mean, I guess the idea there, Sean, would be, okay, a lot of people have been talking about it, and including you. It's like things to watch are interest rates on the 10-year, where we're at, where the dollar's at, and this idea of the Fed and when are they going to blink. And I think that that's been kind of one of these interesting dynamics too, because we heard from Jay Powell on Friday basically saying, look, we're in no rush and let's wait and see what happens. And I guess good thing they did. But I would take that to mean if Trump is going to move 90 days out, that he's the one who blinked first, not Jay Powell, because Jay Powell had his chance and maybe got close. I don't know. But it doesn't seem that he's going to be the one blinking. So what do you make of that? If it is the case that, okay, maybe if Trump backs down, that means interest rates don't come down necessarily by the Fed's move. And then maybe that's not as good for Bitcoin anymore. So how do you see this shaping up as someone who still has, I think, if you haven't changed it, $175,000 price target for the end of the year?
Yeah, look, I think that, first the Fed. So the Fed just has no motivation right now to blink. Right. I mean, we've had some cooler than expected PCE prints. They've stated that they're unsure about how they want to handle stagflation, or rather potential stagflation from tariffs. And if you step back and think about inflation, ultimately, I think that any weakness derived from this ongoing trade war will end up doing Powell's job. And so I just don't see, unless there's some kind of credit event or, we see spreads start to really gain some steam and there's a concern about the stability within the banking system, I don't see anything moving the needle for the Fed. And then what were your other questions?
Well, the idea of, where we go, because I feel like, I don't know, I don't think anyone had necessarily on their docket such a tough start to the year. I mean, some people expected a bit of a pullback, and then some people expected maybe some jitters around tariffs. But how do you I guess it's a simple question, really. How do you see us getting from just back above 80K on Bitcoin to 175 if kind of these dynamics of Trump versus Powell are going to continue through the year?
Yeah, look, I mean, we offer a pretty real-time, up-to-date research service in which we're constantly updating our views, and certainly we like to put out price targets and like to be accurate around them. But I think those real-time insights are probably a little more important than price targets. And I think right now I'm really focused on where we find some longer-term support, and then I'll probably start to worry about level of upside later. I think you mentioned there's a lot of moving pieces right now, and there's a lot of ways that this could play out, and it's really going to come down to whether deals are reached and how long it takes for the deals to be reached. Mm-hmm. And I do think long term, and what long term means here, I'm unsure of, but for a time frame greater than say 3 months, I think that this whole trade war debacle has, created a pretty great environment and a pretty great bull case for crypto going forward. I think if you assume that Trump is going to find a way to achieve some kind of Mar-a-Lago accord with all of our trading partners, and we do balance trade, it's going to require a weaker dollar. And that's going to be and it's probably going to end up, probably going to require a scenario in which the US dollar is less central to global trade. And so that would be a great environment for Bitcoin and crypto to succeed. And if, they don't reach a deal, it's likely that all of this, debating over trade and the stopping and starting within the economy is going to lead to some kind of slowdown, which will eventually result in some kind of need for stimulus. And as we all know, that is also a great environment for Bitcoin. So it's really, we just have to navigate through this morass over the next, 2 to 3 months, however long it takes. But ultimately, I think on the other side of it, it's going to be a great environment for crypto.
Well, it's complicated because, of course, as you've covered and as Fundstrat covered, and again, shout out to the work you guys did, because you did kind of predict some of these moves in terms of, you looked at Bitcoin implied volatility. I think that's the metric that BVIV technically correlates to, or correct me if I'm wrong, or perhaps options volatility. But you did see that, and you predicted a move of either 15% to the downside or upside. We basically got exactly there in terms of where Bitcoin dropped to. So again, I would reiterate what Sean's saying about Fundstrat's research and paying close attention in the chop. But now as we move through that, I just want to play a little bit of what we heard from Peter Navarro this morning on CNBC, because it did seem like, and of course this is going to be expected, as the guy who's the main tariff architect in the Trump administration, I don't think he's going to back down because it's his thing. That's why he's there. But it was very interesting to see even Elon Musk break with Peter Navarro publicly on Twitter, basically calling him an idiot, or that he hasn't built anything over the weekend, which is pretty crazy to see. But nonetheless, Peter Navarro was steady as she goes when it comes to trade and why they're doing this morning. Here's what Peter Navarro said. Now it sounds like President Trump might be shifting a little bit away from it, but let's just play what we heard from him.
What I'm seeing, Joe, is a beautiful situation where we will hit 50,000 on the Dow, and we're going to have a broad-based recovery in the S&P 500. The market's trying to find its bottom now. The thing I would say to retail investors is don't get panicked out by all of this. And what the president could have added to that fine truth was the fact that the biggest tax cut in American history, the broadest-base tax cut in American history, is coming within a matter of months. So any discussion of recession seems silly when you factor that in. Plus, the Fed is not going to do its job, but the long bond is doing it. We're lowering our oil prices, which is just amazing. Right. And here's the one other thing I want to say macro-wise, Joe, because look, this is all about people worried about global recession. That's what they're worried about. The restructuring that's going to happen, Joe, globally is going to start with China and Vietnam and Germany, heavily export-dependent countries. They're going to have to engage significant fiscal stimulus to reorient their economy. So that thing is going to go on. In the meantime, we're going to boom here.
We're going to boom here. And I don't know if that's true or not, because we don't know what the president's going to do with his 90-day thing. So it's all very much up in the air. But we heard the same stuff from Trump on Truth Social too. Just want to say that he was out there basically saying the same thing we just heard from Navarro, saying, look, don't panic. The United States has a chance to do something that they should have done decades ago. Don't be weak. Don't be stupid. Don't be a panicking. Whatever panicking is. And then he goes on to define that a little bit. But Sean, in terms of why people shouldn't be a panicking, again, I think just to reiterate the point here from Navarro, it does sound like they're still going to kind of chase some of this stuff. And so I don't think, correct me if I'm wrong, but I would be in the camp that we're not out of the woods. It sounds like you might be saying that we could be at a structural bottom.
I would say that the mid 70s is probably a good place to take a swing. I do think that when the
just to be clear too, not to cut you off, but it sounds like that's based mostly on the structural idea of if we take a zoom out chart of a year, that's kind of like where we previously hit a top. Yeah.
I mean, there's likely an area of support there. Just broadly speaking, if we move below that range, perhaps it's we're probably entering a bit of no man's land. But look, to your point on taking the admin seriously, I think that's been kind of the problem in markets over the past couple of months, is that Trump's been pretty adamant over his desire to balance trade, and he's said what he's going to do, and he's done it. And I think that's why there was a big catch up in the reaction in equities. Now, Navarro, what he just said regarding the long bond, I think that's kind of being proven false today, seeing the 10-year move higher. I think the 30 years moving higher. So that's an interesting tidbit. I also think it discounts the whole idea behind reordering global trade and what that means for U.S. equities. I think, for better or for worse, you could argue that a big portion of U.S. equity multiple expansion over the past couple of decades has been due to policy steadiness and an unspoken deal between companies and policymakers around fiscal policy and trade policy. And if that is reworked in some dramatic fashion, it probably does necessitate a re-rating of multiples, just from a high level perspective. And obviously due to increased costs, assuming that there are, large tariffs put in place, it's going to change margins around quite a bit. And so, I don't know if it's the way that they're proposing it as, just hold on and then it's back to business as usual after. I'm not sure if that completely syncs. Those two ideas sync with each other. So it's kind of where I know it doesn't have much to do with crypto, but it's kind of where my head's at.
Well, we're in this world. We're in this world now where a lot of the crypto moves have nothing to do with crypto, which I think is very weird. But there is one that might be related, which was, of course, what we saw play out today, which was Strategy came out and said, "Hey, look, we weren't the buyers last week because they haven't bought any Bitcoin in Q2 yet." And so I think that's kind of interesting because you were talking about it last week. In terms of, everyone was talking about it last week in terms of this dislocation. Why is Bitcoin still holding when markets are down? What is this decoupling we're seeing play out? Could potentially crypto, could this be the shift we've all been waiting for, that a flight to safety is a flight to Bitcoin? Definitely not the case, as we saw it play out later on Sunday. But if you don't have Strategy, who was buying last week, you could say, okay, maybe there's beneficial, still some dry powder there if Bitcoin recovers for Strategy to enter the market and provide enough gunpowder, so to speak, to shoot higher. Or it could be that, it was mostly buys from GameStop and some of the other companies. I mean, how do you kind of put corporate buys back into the mix?
Yeah, I mean that was our view last week. I suppose it does look like strategy was not in the market, but our view is that the relative strength had a lot to do with, you know, it was probably partially due to a lot of risk clearing before equities out of crypto, and B, due to corporate treasury TWAPs. And I haven't looked for any press releases yet, but we know that GME, GameStop raised I think 1.5 billion on Tuesday, so it's likely that they were in the market last week. And Marathon Digital, the Bitcoin miner, also had about 2 billion in dry powder that I would imagine, or potentially they deployed. That was at the market equity offering, so there's no defined time frame for that. GameStop was that capital was raised through the issuance of convertible notes, and so it's likely that they wanted to deploy that capital immediately after that capital was raised. But it's likely it's possible we had $3 to $4 billion in dollar bids from corporates last week. But regardless, it does look like that proved to be correct, as we did roll over last night.
Mm-hmm.
But
well, I just feel like because of the size of those buys is certainly like one of those things. If you look at crypto inflows and outflows, which CoinShares' last report just showed, actually not that crazy. Which again, I think we've had a few guests come on, Sean, and say like, don't pay attention to inflows, outflows anymore because too much shenanigans in terms of, whether you're playing these carry trades or whatever, don't really give you any indication one way or the other. But I thought it was interesting to see kind of muted size to the downside when it comes to outflows last week. But one other thing too is we're seeing more headlines come out right now. CNBC saying no one at the White House is aware of that 90-day pause we were just talking about. So we are seeing a little bit of weakness come back in terms of why we flipped back into the red on the NASDAQ right now. So this is the volatility we're going to see play out, I think.
Right, and that's actually a negative in and of itself, right? Especially when you have such a reflexive asset that depends on a lot of momentum-based capital with all this headline risk. It's tough for people to get long and stay long in size when you have so much headline risk.
Yeah, and I think again we're probably gonna be stuck in this for a while, but we are seeing kind of Ethereum now swing lower as well. And I do want to ask you, because we talk so much about Bitcoin, but when you look beyond it, for a while you've been pretty bearish relatively on ETH, been pretty bullish relatively on Sol. I mean, I assume that, since all of these things have been so correlated, you see that chop, that it would be more of the same in terms of what your advice would be when it comes to Bitcoin, ETH, Sol, the rest of crypto. I see a lot of people talk on the timeline about just kind of like a shift. If you're in crypto, just wanting to move more towards Bitcoin, or in your case, split between stables and Bitcoin. I mean, how do you kind of give the advice there if we are expected to just continue with this chop?
I mean, my advice is just understand that Bitcoin is the new hurdle rate for assets more broadly. But especially if you're in crypto, if you're holding an asset and you have a certain time frame and you don't think that you're going to be able to outperform Bitcoin, you don't really have a purpose behind holding that asset, unless it is you're holding that asset to use it, of course. And I think more of the crypto industry is starting to come around to that fact. And I think that's why you see more dialogue around just moving your whole portfolio into Bitcoin. That's not necessarily what I would recommend, because there are opportunities outside of Bitcoin, especially at levels that I think are getting to be pretty close to value territory for a lot of these alts. But I think just being conscious of what your hurdle rate is very important, whether you're a fund or if you're just a retail investor. Understand your scoreboard.
Yeah, seeing that the Bitcoin dominance rise to 62 and continue to climb. I mean, it wasn't too long ago that we had Pantera on the show talking about, I want to say December, close of 24, about how altcoin season was upon us, and that has not played out at all, because we have just constantly seen anything beyond Bitcoin including ETH, under pressure. I mean, I'm pretty sure we've completely round-tripped, Sean, in terms of the ETH BTC chart. I don't even want to it's so ugly. I think if we bring it up right now, we'll be taken
Yeah,
off
it's
the
brutal.
air.
I think we're back to like 2019 levels now. Yeah, I mean, look, it's the market structure in crypto has changed, especially this cycle. I think a lot of inflows came in through Bitcoin ETFs, and there were periods of, the tide lifting all the boats, right? Because people do have allocation to Bitcoin, despite what people might say. People have allocation to Bitcoin, and so there was a wealth effect, but you really saw limited amounts of new capital flow into crypto like you saw in prior cycles. You didn't have capital flowing into ETFs, rotate into, X altcoin. There weren't the same rotations. And so that's why we've seen so much volatility, and we really haven't seen really any altcoin regain its Bitcoin pair all-time high this cycle.
Well, I mean, when you put all the pieces together, and it sounds like you were kind of touching on something that became pretty evident to me over the weekend too, just in terms of confidence in the market and confidence in this administration. And I think it's something that Bill Ackman also hit on, just in terms of, and we'll talk about this a little bit more after we let you go, but just in terms of like the idea of the social contract, that is like, you don't, as president or the administration, come in here and try and undercut markets the way that we've seen this administration kind of do over the last few days and weeks around tariffs. The Rose Garden seemingly going to be one of those things that just kind of, I think, will be a moment that everyone looks back on, and hopefully things get better from there. But just the idea of the numbers being so much worse than everyone expected, including, it sounds like, Fundstrat too. But when you kind of fast forward, specifically for crypto, because I'm in this camp, Sean, it's very weird to see macro kind of deteriorate the way that it has. But then think about everything that's happening from a regulatory perspective, setting up for Bitcoin and the rest of crypto to be in a kind of ideal spot, which is stablecoin bill and market infrastructure looking pretty healthy. But if the rest of everything else in DC is on fire, then maybe that's not going to be the case the more we move through 2025. Because who the hell cares about stablecoins if you've got whatever you've got playing out in DC? It just seems like it'll slip down the priority list, but I could be wrong. If it doesn't, how important is that? Does it even matter anymore if you got the rest of everything else in the shitter, so to speak?
Sure, it matters. Yeah, I mean, that's, I think, if we get a sound market structure bill, I think I mentioned this earlier, but the breaking of that social contract, whether you think the intention is good or not, doesn't matter. I think a lot more people, around the world are now questioning the sanctity of their relationship with the U.S. and the U.S. dollar, and I think imagining a world in which the U.S. dollar is and U.S. treasuries are less central to global trade. And in that world, in that more multipolar setup, a non-sovereign neutral currency backed by a global network of ASICs, I think becomes quite appetizing of a pitch. And, beyond that, beyond Bitcoin, you have, decentralized financial rails, payment rails, and applications that, can function and serve other jurisdictions. And I think all of that technology does well in this environment that has increased multipolarity and decreased trust in that social contract, so to speak. And so if you have that going on while we're forging ahead with creating good market structure regulations and solid stablecoin regulations, I think that gives crypto the opportunity to step up and mature and become a solution to a lot of the issues plaguing the global market.
That's the thing that's so interesting to me, because it's almost as if, and hear me out on this, but it's almost as if everyone keeps saying Bitcoin was built for this moment, right? Like this idea of like, that's what we're here for, is you can have incompetence in like the headline. By the way, I just need to bring this up because it is true that the White House has come out in full throat and denied this idea of Trump considering that 90-day pause that we just saw be the main result or the main cause of why we saw Bitcoin pop on this chart, and now giving it back. Let's shrink this chart down and let's refresh, because we were at 78.2. There we are now. Okay, so that's why we're seeing a little bit of it give back those gains, and it's going to be a long session today. And of course, crypto never sleeps, so we won't stop at 4. But Sean, I mean, I guess that's kind of what I'm getting at, which is if we're seeing this whipsaw, you hit on it just a little bit earlier, is that you can't have momentum form around these assets. You can't have a trend of basically anything, and crypto moves that way. Even though, weirdly enough, we've evolved enough to where a lot of these fees, or at least maybe there's less so now on Ethereum, but it was the case that normally people would look at these blockchains as like, oh, they're fee-generating things, revenue generators. But I don't know. I just don't understand how we move forward if we're going from one headline to the next in a matter of hours here. It's like impossible to really see any bottom formation.
Yeah, look, I think that is tough to develop a trend, right? It's tough to develop a trend in that environment, but you could certainly find a viable bottom to wait that headline volatility out. And I do think at some point the market ends up becoming somewhat numb to headlines. Right, at some point it'll just be clear that, hey, these negotiations have gone on for too long, to an extent that the businesses do not have a clear view into where and how much they should invest, and the economy is going to degrade because of it. And we'll see assets react and kind of ignore any headlines related to tariffs at that point, most likely. Or in the other direction, it'll perhaps the market becomes very certain that all tariffs will be rolled back. I don't know what would precede that, but sometimes the market ends up deciding in advance of the headlines slowing down. So that's something to keep an eye out for.
Well, we will be keeping an eye out on all that stuff. And of course, as always, appreciate you coming on to kind of keep us updated as well. I know, with all these moves, there's a lot on your schedule now. So thank you for making the time as always. And I'll let you run to the next one. But as always, appreciate you coming on here, Sean. Great insights per usual. And we'll see if that bottom holds. You nailed the swing. Gotta say, you called the 74 again. So we'll follow your updates a little bit closer, because I think we owe that to the coinage community.
Appreciate that, Zach. Always a pleasure being on the show. Thanks for having me.